What's up, guys? Hope your weekend was great and you're enjoying this nice cold Monday. Here's a quick breakdown of my predictions for the real estate market in Indy in 2020, how I'm seeing this market as an investor, and how that's going to translate to you as a home buyer or seller. So far, the market is somewhat continuing some trends that we saw in 2018 and 2019. Low inventory and low interest rates are leading to some substantial price growth, particularly in some revitalized downtown areas and suburban neighborhoods. So homes that are typically at or below median pricing are the ones that are seeing the most substantial growth. And in 2020, home prices are going to continue to rise. So they will continue to rise, albeit it may be at a little bit slower rate, which kind of indicates to me that it might be a good time to cash in on what we've had as a great run these past couple of years. It's really been an incredible run. We've seen in certain areas year-over-year growth of 10% or higher. So if you're thinking to buy or sell in the next few years, potentially this year could be a great year to do that. So another key trend that I'm starting to see is that price to rent ratios in Indianapolis are starting to reach a tipping point. With this recent wave of appreciation, rent prices have gone way up in certain neighborhoods, and it's now gotten to a point that it's less expensive to own than to rent in most good neighborhoods. So this is great for new home buyers, but it also offers a very viable exit point for investors that have had long-term holds. A lot of these investors bought in areas that used to be distressed, 3 or 5 years ago, now great, safe neighborhoods, and the recent wave of appreciation has brought those values up to a point where it might be a good time to get out of those investments and get into a new distressed area. So this is a great time to flip single-family homes as well, as affordable distressed homes can be found. The prices and days on market are ideal to then sell those flips. But if I'm looking as a first-time home buyer right now, I would strongly be considering a fixer-upper. Look for something that's got some ugly carpet, maybe some ugly paint, a dated kitchen, things that are easy to fix and not super expensive, but that are going to deter a lot of other buyers from looking at that property. It could be a great opportunity to get into something with some instant equity. So another really key trend as well is that home buyers are continuing to focus on starter home models that are at or below median pricing, which is just increasing inventory for those looking to buy their first home to try to keep up with the market. So this is due to a demographic trend that more millennials are coming around to home buying age. This is great news for you if you're in the market for that type of home. This hopefully alleviates a little bit of the inventory shortage. But it also leads me to say, if I'm a first-time home buyer, I would be looking at new construction. Many builders are offering incentives. It's a great chance to buy with some instant equity, and you don't have the potential to get in a bidding war, which we see all day long in the best neighborhoods, in the suburbs, because these inventory levels are still extremely low, and there is a very large buyer pool for that 2-3 bedroom 18 to 2,500 square foot home. Now, if I'm a seller in this market and my home is above median pricing and I'm looking to downsize in the coming years, I would strongly consider looking at this year as a potential exit point. With builders continuing to focus on increasing inventory of starter home models, inventory for those higher price point homes is going to continue to suffer. So prices of those homes will remain extremely strong in 2020, and I would even venture to say probably beyond that as well. Another thing to keep in mind is that interest rates are at all-time lows right now, which is great for both buyers and sellers. On the buyer side, you can afford to borrow more and keep the same payment, so you can get a bigger, nicer house for the same amount of money every month. But on the seller side, your buyer pool is much larger because more folks can afford to buy your home. Also, more folks can afford to pay more for your home. So great for both buyers and sellers. Nobody likes to pay more in interest and give more money to the banks. Another thing that I'm seeing that a lot of people aren't really pointing out is that the multifamily investment market in Indianapolis is going to continue to be extremely competitive. Both in-state and out-of-state investors alike are looking for the cash flow that multifamily properties offer. So in a lot of cases, I think buyers are overpaying for multifamily properties. I don't know how sustainable this is going to be long-term, and there are certainly advantages to multifamily, even in this inflated market. But this leads me to suggest that looking at single-family properties for the best plays on finding those wedge deals where you can instantly grab appreciation by fixing the property up, or having a good chance for appreciation long-term, I look at single-family homes. I find it an even greater advantage to look at areas where there's less competition from other investors. So there's a lot of hot neighborhoods right now. You know, you've got Bates Hendricks, you've got Fountain Square, some of the near East Side neighborhoods. All of these investors are looking there. All of them are writing cash offers. With inventory as low as it is right now, those properties, I mean, I just went and looked at one the other day that I was the first showing on the property once it hit the market, but it already had 2 offers on it. It's just insane right now. So with inventory being that low, those hot neighborhoods are extremely competitive. It's very hard to find a good deal. If you're willing to look at neighborhoods that other investors might not be looking at, perhaps further out in the suburbs, up and coming, next to neighborhoods that are up and coming, it may be a little bit longer before you see that appreciation, but you may also be able to get much more of a wedge deal and get more instant equity right now. So I hope you enjoyed this video. I hope it gave you some things to think about. I do want to add this small disclaimer that these are my opinions. These are not tried and true facts. Run your own numbers, do your own research and due diligence before you buy, sell, or invest. But just some things that I want you guys to think about. And nobody can predict what the market's going to do accurately. And especially in a world where Twitter can affect markets and affect foreign affairs and things like that. But you know, these are things that I'm seeing in the market right now. So if you want a more in-depth analysis on your particular situation, get in touch. I'd love to help.